Welcome back to my video, informative video. So, without wasting any time, under NISM, okay, practice examinations, okay, under which series, fixed income in fixed income securities certification examinations, okay, we're gonna start without wasting any time, okay. So, what is this? This is the 50th question. Let us start. Debt securities are often called fixed income securities because they promise either a fixed stream of income or a stream of income determined by a specific formula, okay. Question number 49. A corporate debt instrument's rating movement from AAA to AA indicates deterioration in issuer's financial capabilities. Okay, means minus points. Little bit of minus points. Ratings determine spread over sovereign bonds. Okay. Monetary policy at its core is about determining interest rates. What is the average daily balance that a bank is required to maintain with the RBI as a notified percentage of its NDTL CRR? That is cash reserve ratio. Which bonds refer to the debt securities issued by a state to finance its capital expenditure? SDLS. Okay, the rate of the interest paid on the bond is referred to as coupon payment. The contract gives the bondholder the right to redeem the bond at its pre-fixed date before maturity. The option embedded of this contract is known as put option. The holders of which of these will be paid last in the case of the company's default equity. Equity is suffering. Interest on the sovereign gold bonds is credited semi-annually. Okay, we're gonna keep this. Okay, in bond prices behave inversely with interest rates. Okay, sovereign risk is the risk that a foreign government's action cause a default or adverse decline in its bond price. The easiest way to deal with the rising prices is to invest in inflation index bonds, which contracts are bilateral agreements in which a party can purchase or sell assets at a certain price on a specific future date forward contracts. In an options contract, the counterparty with the obligation to execute the option is option seller. Which instrument is discounted? Is a discounted instrument at the time of its issue? Treasury bills. What will be the closest investment to make today to earn 1 lakh after 10 years, assuming a continuous compound interest rate of 8.62%? Amount is 42,241. Investment today. Make investment today to earn 1 lakh after 10 years. Okay. So what will be the PVIS, that is present value of interest rates. Okay, if the required rate is 10% compounded semi-annually for the 2 years of maturity, 3.55. This is you can calculate present factor with the help of annuity. Okay, now at the treasury bill with the 65 day of remaining maturity is selling at 98.65 of its face value. What is the money market yield of the security followed a convention of actual 365? 7.68% is 68%. Sorry. What is the bond equivalent yield of the 91-day treasury bill on the issuance day with a cutoff yield of 5.75%? 5.92%. Today I'm not feeling well, then also I'm making a video. The most important assumption of YTM is reinvestment of the future coupons at the same yield to maturity. Alright. Spot yield is explained as the yield relevant for a particular maturity. A bond of face value of 100 with a 10-year residual maturity paying 8.2 semi annual coupon is currently trading at a yield of 7.8%. What would be the approximate price? 102 rupees 0.74 paisa. Okay, in which situation the callable bonds are likely to be called when an interest rate is lower than the coupon rate? Okay, the bond would receive rupees 6 every 6 months for the next 2 years and the 100 rupees at the end of these 2 years at the redemption value. What will be the price if the market yield has increased by 10 BPS? After its coupon was decided when it was issued at par. Okay, BPS is basis point value. Okay, the answer is 98.29. Okay, which of the following is not relevant in the sovereign yield curve? Credit or default risk? Normal yield curve depicts long-term yields are higher compared to the short-term yields. Alright. Market segmentation theory depicts that bonds of the different maturities are not exact substitutes. The cubic spline is defined as series of the curves that is continuous at all the points. I'll show you. Cubic line is one of the indicators one can use. Okay. Alright, where are my here over here. Okay. Liquidity premium is likely to increase with increase in maturity. Okay. PVBP represents the change in the value of the bond or a portfolio if the yield changes by 1 BPS. Duration can be explained as payback period of cash flows. Which of the following is correct for modified duration? Percentage change in the price with respect to the change in the yield. If the duration of the bond is 6.4 years and the coupon is paid every quarter, what would be the modified duration of the bond if the bond is trading at 7% per annum? 6.29. All right, this is a Macaulay duration is 6.2. The yield of the bond is 5.8. Coupon is paid annually, and the convexity of the bond is 65.84. What will be the percentage change in the bond price if the yield falls by 20 BPS, 13.4% plus? Money market is used for financial short-term asset liability mismatch. Okay. Uh, okay. The notice money market is typically 2 to 14 days. Okay. Bank use call money market for liquidity management. MIBOR is based on call market deals. I'm gonna show you what is MIBOR. Okay. Let us check it out. Curiosity for answers. Actually, it's an interest rate. Array, I don't want the office. I want the full form. Yeah. Mumbai Interbank Offered Rate. Okay. Told you it's an interest rate. So MIBOR is based on call market deals. Okay, in India, day count convention is followed by repo rate HL 365. Okay. Which agency is the manager of the government debt? RBI. When issued market is used for price discovery. Which of the following entity invest in GSEC market primarily for regulatory reasons? Banks. Obligation under bilateral trades in GSECs is settled at CCIL, Clearing Corporation of India Limited. Okay, let's check it out if I'm wrong. CCIL full form. CCIL full form. Yeah, I am always right. Chalo, another. Multiple price auction means successful bidders would get the allocation at the respective bid price. All success, all all successful bidders. Okay. Now, good private corporates may issue commercial papers for meeting the short-term requirements. Okay. Green bonds are to raise money for social causes under corporate social responsibility CSR scheme of the government. Okay. Now, corporate bond valuation methodology is notified by FIMMDA. You know what is the full form of FI? Yeah, I've searched it. Fixed Income Money Market and Derivative Association of India. It is an association of commercial banks, financial institutions, and primary dealers. Okay, it's a voluntary market body for the bond, money, and derivative markets. Okay, made that easy for you. Okay, short-term debt is issued by private corporates through commercial papers. And the last one, which I had added, which I had done wrong. Deep discount bonds sold at a high discount to the face value. Okay. So thank you for watching, everybody. Please concentrate on your studies. Bye bye. Peace out.